afternoon, everybody, and welcome to this morning's Bambuddha Boost. We have got a very special guest today, Tony from ShineWing Australia, who has donated some of his time to help us unpack and understand all of the packages and the financial bits and bobs that are out there, which I think for everybody is a little bit overwhelming at the moment, especially because there's constant information coming out about that. So Tony's created a really comprehensive presentation for us today with lots of detail, and we'll be sending this to you afterwards so you will be able to use it. Also, this is a perfect opportunity to ask any questions, and we will be covering all questions that are asked today. So without further ado, I'd like to hand you over to Tony to do what he does best, and that's give really good tips and advice.
Thank you, Anna. And good morning, everyone. As noted, the intention is to cover off on the economic and stimulus packages that have been prepared and offered by the various governments, both federal and state, over the last couple of months. I'd like to set out both the more recent announcements around Jobkeeper package, as well as just reiterate some of the federal income tax stimulus measures that are still on offer. I'll also run through some of the administrative concessions that the Australian Taxation Office is offering in terms of payments and lodgement obligations. And finally, I've got a few slides on the eastern board states and the concessions and reliefs that are being offered by the state governments in New South Wales, Victoria and Queensland. As noted, the slides are quite comprehensive, and if we were to go through them in detail, they'd take quite some time. So I'm going to focus on the main points associated with each of the slides. So if we start off with the Jobkeeper, essentially the basics there are that the government's intention is to provide a subsidy in respect of each qualifying employee of $1,500 per fortnight. The intention is that it will be paid to eligible businesses that qualify as the types of entities that will be available for the concession. It is subject to a test as to a decrease in turnover to a comparable period in the last calendar year. And there are conditions that must be met in respect of each employee in terms of the amount of wages that must be paid to qualify for the relief. And finally, noting that it is something that employers, and for that matter, single person operators and businesses, will be required to elect into and will be required to lodge various forms. In terms of who's the eligible employee to start with, the measures working on the basis that the individuals would have had to have been employed at the 1st of March. That can mean that, as an example, they were stood down but still on the payroll, or alternatively, the person may have been employed on the 1st of March, their position may have been made redundant post the 1st of March. The employer has the capacity to potentially re-employ the individuals and have them subjected to the concession. The other important in respect of eligible employees is that it is fairly Australian-centric in the sense that it's only applicable to Australian residents or Australian citizens. The extension to that is those individuals that are subject to the subclass 444 visa, and they're essentially New Zealanders that are working and residing in Australia. In terms of eligible businesses, it pretty much covers all operations, whether they be companies, trusts, partnerships or sole traders. There are a number of exemptions. They tend to be tied to government instrumentalities, so the state and government bodies that have employees won't qualify for the stimulus in terms of the Jobkeeper payment, and they've also left out the 4 major financial institutions. Now, in terms of qualifying, there's 2 turnover tests that need to be looked at. The first one is to determine what level of reduction in turnover you need to be able to show to qualify for the concession. And that turnover test is based on effectively all your related parties' turnover, and it's a pretty high threshold. It's at $1 billion. Essentially, for entities that breach that $1 billion threshold, they need to show a 50% reduction in turnover to be able to qualify for the stimulus. For other entities that are below the $1 billion threshold, the turnover reduction is at 30%. For non-profit organisations and charities, there is a further threshold test that applies, and in their instance, the reduction is only at 15%. So that slide just points out the fact that there are two tests that need to be looked at to start with. One is to determine what bracket does your operation fall into, and then the second turnover test is to determine, have you had a reduction in your turnover to such a degree that you actually qualify for the stimulus. On this slide, I've tried to show in pictorial form what you need to be able to show. So for those that are less than $1 billion turnover, I'll focus on those to start with. The intention is that you need to be able to show that your projected GST turnover for periods going forward are expected to be less than your turnover for the same period in the last calendar year. As I noted earlier, for charities and not-for-profit organisations that are registered with the Australian Charities body, their threshold to be able to qualify is that they need to be able to show that their projected turnover has decreased by greater than 15%. I should note that the ATO, pursuant to the rules that have been issued, will also have the discretion in certain circumstances to apply alternative tests. And essentially, the types of examples that they pertain to is that if, as an example, your projected turnover for April is a set amount, but you weren't actually in business in April 2019, then the intention is that the Commissioner will come up with an alternative methodology to be able to determine whether or not you have in fact had a reduction in turnover, even though you don't have an equivalent comparison period from 2019. Essentially, the way that the test works is you determine what your forecast position is going to be. Obviously, for the month of March, you'll probably have figures already available to you, so you would compare March to the equivalent turnover in your BAS return for March 2019, and then determine whether or not the turnover either for March or your projected turnover for April, as an example, when you compare it to April 2019, has reduced by 15% if you're a non-profit or charity, or for most other entities by 30%. Once you determine that that in fact has been the case, you will qualify from that point on for the remainder of the period in respect of each of the employees that are eligible for the stimulus. There is a wage condition associated with the government providing you with a subsidy of $1,500 per fortnight. For those employees who may be stood down or who may have reduced wages or whose wage level is actually below the $1,500 per fortnight, there will be an obligation, if you are to qualify, on the employer to top up their salary and wages to the $1,500 level. So as an example, if an employee has been stood down and is not receiving anything, in order for the employer to qualify for the subsidy, they will need to pay $1,500 to that employee, notwithstanding that they weren't otherwise going to earn any wages, and they will then be reimbursed $1,500 in the following month. For those employees that continue to earn more than $1,500 per fortnight, there's no requirement for any additional amount to be paid. And the $1,500 per fortnight can include amounts that are paid, as I noted earlier, for reduced hours, or amounts that are paid to employees who are on annual leave. There are a number of notification and election requirements. The concession or the subsidy is only to be provided in respect of each employee or qualifying staff member on one occasion. So in other words, if you have an employee who has a number of jobs, they may work for yourself and another employer, they'll be required to nominate which of the employers they want to receive the subsidy. And it will be that employer who will then receive the $1,500 subsidy from the tax office. Correspondingly, it'll be up to the employers to notify the ATO. I've noted there at the moment that the rules have a requirement for notification in respect of all the employees that you will seek to claim the subsidy for, with a due date of the 26th of April for the first 2 fortnights. That date has actually been extended in the last day by the ATO. They will allow until the end of April for employers to notify of their list of employees. Once the employer has notified the Australian Taxation Office that they're going to seek to apply in respect of each employee for the subsidy, they'll be then required to notify their employees in writing within 7 days that they have actually nominated that employee as part of their subsidy application. For a number of people on the call, I note that there is also an alternative arrangement that's being allowed by the legislation, and that is in circumstances where you're operating a business and there aren't actually any employees as such. So this is seeking to cover circumstances where you may be a sole trader, a partner in a partnership, you may be operating a trust as a business, as an example, that doesn't have employees, or you may have a small family company as an example, once again, that doesn't have employees, and you have directors for that entity. In those particular instances, to the extent those operations have employees, there'll still be a requirement for the employee to have been an employee of the entity at the 1st of March. However, for all other entities that don't have employees and otherwise are operating a business, they'll be able to nominate one individual in respect of each entity. So for a sole trader, it'll be fairly straightforward. For a partnership, they'll be able to nominate one partner. For a trust, they'll be able to nominate one beneficiary, and same for a company. The rules, as I've noted in respect of business participants, is that it'll only be one business participant per entity that will qualify for the stimulus. The entity must have had an ABN on the 21st of March 2020, and they must have been lodging either a tax return for the financial year 2019, or they must have provided some sort of supply subject to GST for the period from 1st July 2018 to 11th of March 2020. That's essentially to cater for those individuals as sole traders, as an example, that may not have been operating as sole traders last year, but have been lodging BAS returns in the current financial year. Those entities or those individuals will also qualify to claim a stimulus. What I've done there is set out the timeline as to each of the factors and what the timelines are for notification. As I've noted earlier, where I've noted before, 26th of April in terms of the employee compliance notification and applying for the stimulus by the 26th of April, the ATO have extended that to the end of April at this point in time. The arrangement, as the legislation is currently drafted, is to last in respect of each fortnight through to the 27th of September 2020. Obviously, there are a few issues to consider, and making sure that your turnover is classified into the correct category. To the extent you're unable to show a decrease in turnover because of the fact that the business wasn't operating or there were other extenuating circumstances, the ATO will be issuing guidelines as to how you can otherwise satisfy the tests. And you'll need to do analytics to determine, okay, which of the employees are actually eligible? Do I have a number of employees who might have one or more employers, and needing to ensure that you've got notice from that employee? Also doing analytics around where will you need to make a top-up payment to bring the wages up to the $1,500 levy. And finally, obviously, there'll be a necessity to do cash flow analysis, because to the extent that you need to fund this in 1 month, one of the things I should have noted at the start is that the subsidy from the government is not paid until the following month. But I'd run through a number of the federal stimulus measures as well that are still relevant. Essentially, they cover off on the cash boost, the ability to write off assets instantly, accelerate depreciation, trainees and apprentices. Cash boost is there essentially for small to medium enterprises. So those are small to medium enterprises and non-profit organisations with aggregate turnover of less than $50 million. In that instance, the entities are able to obtain effectively a cash boost through their remittance of employee PAYG to the ATO. The minimum cash boost in those circumstances will be $10,000 up to a maximum of $50,000 per financial year. So there'll be $50,000 up until 30th of June 2020, and then a further $50,000 to the 2021 financial year. What I've done in this particular slide is to depict the way that the stimulus will come through as you lodge your PAYG remittances, and to the extent you're either a quarterly or monthly remitter, there'll be payments that then come through based on the calculations per the slides. For those that are fortunate enough to actually be in a position to have the ability to spend money on asset acquisitions, one of the first stimulus measures that was announced was the ability to actually claim an immediate write-off for assets up to $150,000. This particular measure has been extended out to allow entities that have aggregated turnover up to $500 million to claim an immediate deduction, and it applies to both new and second-hand assets. Secondly, the government's also implemented a measure to allow accelerated depreciation. This is only applicable to new assets, and in this instance, it's available to all businesses with a worldwide aggregated turnover of up to $500 million. In that instance, there'll be a 50% immediate write-off in the first year of the asset being acquired, and then the balance depreciated over the remaining life. In that instance, it's in respect of all assets acquired after 12th of March, but they must be installed by 30th of June 2021. And on this table, I've just set out in tabular form the various asset category expenditure limits, the periods where the acquisition or installation must occur by, and what the accelerated depreciation concessions are. Finally, from a federal sphere, there's also a subsidy that's being provided in respect of trainees and apprentices. So for those employers that have less than 20 full-time employees and that had the apprentices or trainees in their businesses as at 1st of March 2020, you'll be able to claim a wage subsidy of up to 50% of the apprentices trainees' wages during the period from 1 January through to 30th September. There are limits, as I've noted as well on the slides. Next, one of the most important things is around ATO administration relief. What I've noted on this slide, and I'm not proposing to go through all the dates, is all the upcoming lodgement and payment due dates that people would be facing in the coming months, both from a perspective of income tax returns, fringe benefits tax returns, activity statements, and instalment notices. So in respect of all these measures and all these obligations, there is a capacity to actually apply to the Australian Taxation Office to defer the lodgement of the returns, as well as to defer payments that might be due on particular dates. The deferrals are going to be up to 12th of September 2020, and the ATO can also provide low interest payment plans if you do have the capacity to pay, but will require a longer period of time. To the extent your inability to pay gives rise to interest and penalties, that might have been incurred post 23rd of January 2020, the ATO on application will remit those interest and penalties. You also have the capacity to vary if you're paying income tax instalments for company returns or your own returns. You have the capacity to vary those back to zero. And to the extent you've already paid instalments, potentially for the September and December quarters, you have the ability to get a refund of those instalments. Further, if you're currently lodging your VAS returns on a quarterly basis and you're entitled to refunds in respect of those returns, you can convert to lodging them on a monthly basis so that you can actually get those refunds back at an earlier point in time. Important point to note in respect of these reliefs is it's important to ensure that your lodgements are up to date, that you are paying employee superannuation on time, and you communicate early with the ATO in respect of your particular circumstances in order to garner the relief. On this slide, I've put down a few links. One is to my own firm's links, ShineWing. We have pages that we're updating on a regular basis for the reliefs. But probably more important, the second link is to the ATO's cover page for all their COVID-19 measures. On that cover page, they then have a link to each of the reliefs that I've gone through so far and more that you may be interested in. And I've also included contact numbers for the Australian Taxation Office. Finally, and just quickly, in terms of the state stimulus measures, I'll just cover off on New South Wales. Essentially, New South Wales, like a number of the other states, has provided relief in respect of payroll tax predominantly. New South Wales, like Victoria as an example, is applying or providing grants of $10,000 for those employers whose payroll tax liabilities for the year are less than the threshold. So in New South Wales, the threshold is $900,000. You wouldn't otherwise qualify for a payroll tax concession, but the state has decided for those employers that don't otherwise pay payroll tax, they can apply for a grant of $10,000. For those that do pay payroll tax, they are also offering a concession, and that is there will be a 25% reduction in payroll tax liability for those employers who have a payroll tax bill Australia-wide of less than $10 million. New South Wales also has a number of state levies like licensing fees associated with hospitality industry, parking service fees, etc., that they're either waiving or deferring. New South Wales is also allowing rent relief for, as originally announced, if you are renting from a government instrumentality, you can apply for rent relief for a 6-month period. You will have noticed in the press in recent days that each of the states are now coming out with further measures for a more wide-ranging rent relief to be negotiated between landlords and tenants. And New South Wales, like the other states, has also set up various funds effectively to provide further expenditure. In New South Wales circumstances, they've hired another 1,000 employees within Services New South Wales to assist those that are applying for various grants and support. They've also spent money on maintenance and cleaning contracts. So the funds are being used essentially to assist people to remain in employment or alternatively to garner skills to go into alternative employment positions that are in high demand, such as the health sector. As I've noted, I've also covered off on Victoria and Queensland in the slides, and also just included some key actions in respect of each of the state measures to check on the state revenue and the Business New South Wales, Business Victoria sites to see what you may be entitled to. Some of the concessions are automatic, but it is important to ensure that where they are automatic, the Development Authority has all your banking details and address details up to date. And to the extent they are automatic and you haven't heard, obviously follow up the release. Finally, just my contact details in the slides if you've got any further questions. And then we revert back to Anna. Apologies for going over time.
No, I think it's probably time well spent. Thank you so much, Tony. We're just going to go to questions and answers now. We do have a couple of questions that have come up across a few areas. So let's touch base on the first one. So I know you will have covered this, but as a sole trader that has been operating with revenue for only 4 months, I have not yet got LY revenue recorded to show a 30% reduction. So what's the advice that you could give as is not yet completed a BAS return?
Okay. In that instance, my understanding is that the ATO should be coming up with alternative methodologies that entities can use. I expect what will happen is it'll be necessary to lodge whatever BASs are available, or potentially lodge to extend it's a quality BAS and the quarter hasn't finished yet. Having said that, the quality BAS for March should be due shortly. So upon lodgement of those, it'll be a matter of then projecting out what you think your income will be over the next quarter. And I expect that the ATO will then use those figures to determine your ability to qualify. So I would still be applying and then making applications through the ATO through the mechanism that they set out for those that don't fit in within the basic test.
So would that be for the Jobkeeper payments, Tony?
Correct. The Jobkeeper payments will still end up being made at the $1,500 per fortnight, but as I noted, they'll be made 1 month after the receipt of the information.
Okay. Did that answer your question there? Okay, so we'll move on to another question here. So the cash flow boost minimum, $10,000, is this available for sole traders?
It's unfortunately only available for those that actually have employees. So it's only available in respect of a boost or a return of funds where you're remitting tax withheld from salary and wages paid to employees.
Okay, and is a director of a trust considered an employee?
They could be an employee provided they're actually recorded or within the ATO system as having been receiving directors' fees, as an example. So in that instance where directors of a trust or a company are actually receiving fees of some type, they would be considered to be employees in those circumstances. If they're not employees, as I noted earlier, as a representative of a trust, one person can nominate to receive the Jobkeeper payment, who may not be an employee.
Great, thank you for that. And do we have any final questions from anybody? Just see if anyone's got any last burning questions.
The only thing I would add, Anna, while we're waiting for question, is that for those that don't necessarily qualify under the basic test for the Jobkeeper, as I noted earlier, the Australian Taxation Office is obliged to come out with alternative means for people to be able to satisfy the reduction in turnover test. So I would make sure that you apply and keep a watch out for what the criteria is that will be given for those that don't satisfy the basic test.
That's really good advice. And so they're trying to make it as easy for possible for everybody rather than hard for everybody at this time. Is that right, Tony?
That's correct. Essentially, this is the alternative methodology of keeping people in employment as compared to having people applying for the job seeker payment. So the Jobkeeper's aim is to effectively keep people in employment as an alternative to people effectively becoming unemployed and having to apply for job seeker.
Brilliant. Thank you very, very much. I think that was a really good summary today, and we're going to put this video online on our blog, on our website. Also, we'll send through the brilliant and comprehensive deck that Tony created there. So we'll send that through right away so you can get into detail. If people do want to get in touch with Tony, please do reach out. ShineWing are doing some amazing stuff and have very graciously donated the time to support us right now. So we'll give Tony a big round of applause, and thank you very, very much from everybody. We do have lots and lots and lots of boosts coming up into the future. We don't have one on a Friday, but we're back on Monday, and we're going to be looking at team culture and how to accelerate your team at this time, and to look at culture from a slightly different perspective around maybe this is the perfect time for people to start addressing the how people work together and how you do business in your organisation. So tune in for that. We've also got some really, really inspirational speakers next week, including Michael Crossland, who's one of the most inspirational speakers in Australia this year alone, opened for Tony Robbins and Richard Branson. So we're super lucky to have him join us. So do keep spreading the word, do keep tuning in. Be kind to yourself this week, be kind to yourself this weekend, and we'll see you again next week. Take care.